Welcome to the short video message on Anglo Platinum's results for the first half of 2018. I'm pleased to present a set of interim results that we're particularly proud of. I'd like to emphasize that safe production continues to underpin the way in which we do business, and we achieved the lowest injury frequency rate on record. The total recordable case frequency rate has also improved by 45% compared to last year. Tragically though, we had one fatality in the first half when Mr. Johannes Maimela lost his life following a multiple bee sting incident on surface at a Amandelbult mine in February. We have extended our condolences and continue to offer the family support. Through a combination of improved operational performances across the portfolio, cost control, and the improved basket prices we achieved, a 4% increase in PGM production, EBITDA margin that has increased to 21%, ROCE has increased to 22%. We also increased our free cash flow from operations to 1.3 billion rand, and we've moved to a net cash position of 0.5 billion rand. From a net debt position of 1.8 billion rand at 2017 year end. I'm pleased to announce we're declaring a cash dividend of 1 billion rand for the interim period, following a final cash dividend of 0.9 billion rand in respect of 2017 year end. In addition to delivering these strong operational and financial results, the first half of 2018 has been a very busy one for the business as we continue to look for value-enhancing opportunities across the portfolio. Let me highlight some of the key transactions that have taken place during this interim period. In support of further simplification of the portfolio, we've sold down our 8.8% shareholding in Royal Bafokeng Platinum and disposed of our 33% interest in BRPM. In support of owning and operating the best PGM assets, we are acquiring Glencore's interest in Mototolo. And in support of our strategy to develop the market for PGMs, we've launched the $200 million AP Venture Fund with the PIC. Let's look at the operational performance now in a little more detail. Our own managed mines, total PGM production, increased by 14% to 1.1 million ounces, whilst the platinum production was also up 14% to 534,000 ounces, and palladium was up by 15% to 434,000 ounces, with record PGM production from Mogalakwena up by 19% to 641,000 ounces, and Unki up 9%. Amandelbult's turnaround continued, with PGM production up 9%. Total production from joint venture mines and from our purchase of concentrate increased by 7% to 1.4 million PGM ounces, and that included 688,000 ounces of platinum. Whilst, as I mentioned earlier, the metal in concentrate PGM production for the group increased by 4%, our refined PGM production declined by 5% to 2.18 million ounces. And this was due to the buildup of pipeline inventory as we underwent planned maintenance, as well as the planned rebuild of the Mortimer smelter in the second quarter. Our sales production was higher than refined production of 2.5 million PGM ounces. That increased by 3% year on year, but that was supported by a drawdown in refined inventory. In the second half of 2018, we expect our inventory levels to normalize with work in progress and refined inventory back to normalized levels by year end. Looking at the results from a market perspective, the US dollar platinum price has had a disappointing first half, with our achieved price dropping by 3% year on year due to negative sentiment and less exciting fundamentals weighing on the price. But the US dollar basket price gives a much more positive picture, with the palladium price reaching all-time highs in early 2018. Rhodium, ruthenium, and iridium prices were also strong, supporting the basket price, with achieved dollar basket prices up by 26%. A slightly weaker rand assisted the rand basket price towards the end of the first half, which resulted in an achieved rand basket price increase of 18%. Looking ahead, we expect the platinum price to remain under some pressure in the second half of the year due to a small surplus and not helped by the strong US dollar or by the USA and China trade tariff dispute. Whereas the palladium market is likely to remain in deficit, primarily because of the strong demand from the automotive sector, although there may be some volatility in the price due to these macroeconomic factors. Due to the strong operational performance in the first half, we've revised our guidance upwards for the full year. PGM production will now be between 4.85 to 5.1 million ounces, and that's up from the range of 4.75 to 5 million ounces that we previously guided. Platinum production will be between 2.4 to 2.45 million ounces. That's also up from the range of 2.35 to 2.4 million ounces that we previously guided. Palladium production remains between 1.5 to 1.6 million ounces. Many people have been asking us, so what's next for Anglo Platinum? We believe that there's still value to be unlocked in our existing portfolio by achieving world benchmark performance across all our assets and using innovation, technology, and digital applications to become the benchmark. Much like we've demonstrated already with our significant improvements at Mogalakwena as an example. We've also been doing project studies to understand which of the options offer us the most value-enhancing growth in our portfolio. These studies have shown that building a third concentrator at Mogalakwena will unlock significant value, resulting in an additional circa 270,000 palladium ounces and circa 250,000 platinum ounces from this world-leading low-cost operation. At the same time, we're also investing in our core portfolio with the acquisition of Glencore's 39% stake in Mototolo. By combining Mototolo with our Der Brochen resource, we're creating a major new PGM hub for the company. This will extend the operation's life of mine from the current around about 5 years to more than 30 years. Thank you for taking time to view this video message.